that the number of years of life that will be lost eventually due to the lower educational attainment of children now probably dwarfs the number of years of lives lost due to coronavirus. And these are kind of analyses that we can do. So we have, look, when coronavirus hit in March of 2020, we were all in enormous panic, and we did everything that we could think of, essentially shut down the world to protect ourselves. And that was reasonable. That was a crisis. But it's now December. We're no longer in a crisis. We need to be approaching this judiciously, carefully, and thoughtfully, and say, we know how this disease is spread. How do we minimize the ways the disease is spread? And how do we reopen parts of society that we can reopen safely?
Well, it does seem like public health officials and government leaders are starting to change the way they're thinking as we do get more information. We saw Bill de Blasio over the weekend say, wait a second, we can reopen schools. I mean, how did you read into that, Doctor?
I thought it was exactly what you just said, Tim, that we are beginning to get wiser and smarter about this. Bill de Blasio had, of course, the 3% case positivity red line that he had drawn because of negotiations with the unions, is our understanding. Well, hard to know where 3% comes from. WHO says 5%. There's no magic number, of course. And it was a line of convenience. And I think what he came to is the evidence is so overwhelming that children are missing out by not going to school, particularly poor and disadvantaged children, that it really should be the overwhelming burden of proof should be on something extraordinary that makes us close schools, not closing schools by default. And I think he's right. I think he's right in changing his mind. And I think we collectively, this is why I pushed back about Thanksgiving. I think we have to be careful about saying, well, what is the high-risk activity? Flying is not really a high-risk activity. The high-risk activity is gathering indoors, unmasked, without being careful here, be gathering with, and that's what we should minimize.
No, it's really understanding the information, understanding, how the virus really impacts people. Sandra, sit tight. We're going to do a little bit of news, and we'll come back. Dr. Sandro Galea will come back to Dean and Professor at Boston University School of Public Health and author of Pained, Uncomfortable Conversations About Public Health. He is with us from Boston. We got to ask him about that Moderna news, right?
Oh, yeah. That's coming out.
That stock's moving. All right, you're listening to Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovec of Bloomberg Quick Take. And we have to talk about the Moderna news.
Like I said, every Monday it seems like we're getting some vaccine news.
Which is good. It shows progress. So we're going to get back to Dr. Sandra Galea over at Boston University School of Public Health. First of all, though, back to the trading day and Charlie Pellet.
Hi, thank you very much. Final trading day of November. We've got the Dow, the S&P, and NASDAQ all in retreat. Stocks falling from records as investors assess the prospects for risk assets after a blistering month-long rally. Crude oil is declining. S&P down the most in a week, but it does remain on track for its best month since April. S&P down 22, a drop of 0.6%. The Dow down 344, lower by 1.1%. And NASDAQ is down 18, a drop there of 0.2%. 10-year yield 0.83%. We've got gold down 0.4, 17.80 the ounce. West Texas Intermediate crude down 0.4%, 45.35 a barrel on WTI. As we've been reporting, Moderna is requesting clearance for its coronavirus vaccine in the U.S. and Europe after a new analysis showed the vaccine was highly effective in preventing COVID-19 with no serious safety problems. Dr. Joshua Sharfstein is Vice Dean of the Bloomberg Johns Hopkins School of Public Health. And on Bloomberg Television this morning, he told us this is going to be a busy period for FDA regulators.
Well, I think we're going to see some very important meetings happening over the next week or so. In the United States, convened by the Food and Drug Administration, where the companies will be presenting their data. The FDA will be presenting its own analysis of the company's data, and independent advisors will be giving their opinion. And I think with each sort of turn of the wheel of review, hopefully that will be an opportunity for people to peer in, really understand what's going on, and have confidence. That's what I'm hoping for.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Moderna shares, they are up by 17.4% right now. Pfizer shares up by 2.4%. And shares of BioNTech, they are pushing higher by 10.6%. Novavax's stock has reversed a pre-market drop and is now higher following other companies developing COVID-19 vaccines after the company said a study in the UK reached full enrollment and will have results soon. Novavax shares up now by 10.5%. Recapping, stocks lower, S&P down 22, a drop of 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. All right, we want to get right back to Dr. Sandra Galea, Dean and Professor at Boston University School of Public Health, author of Pained, Uncomfortable Conversations About the Public's Health. It is Bloomberg Business Week. Carol Massar, along with Tim Stenovec of Bloomberg Quick Take. So we got to talk Moderna.
Yeah, I mean, you heard Charlie just now saying shares of Moderna are higher by 17% on this.
Yeah, investors pretty enthusiastic about it. So, Dr. Galea, so here we are, Moderna, a second press release. Someone said to me, or I was listening to an interview earlier, a second press release in 2 weeks, but they've still not released some really key data points. Tell me how you read the Moderna news.
Well, I think there's no way of reading it but as very good news. Okay. Now, of course, we still need to know some of the fine print, but Moderna and Pfizer both use similar approaches to come up with very similar answers in terms of effectiveness. This is really dramatically good news. It uses mRNA technology, which didn't exist for a vaccine as recently as a year ago. So I do think that it makes COVID a triumph of biomedical science. Of course, it leaves COVID an utter failure of a lot of other forms of science, social sciences, and a lot of ways in which we've controlled it, but that's another discussion. But from a vaccine point of view, the fact that we are this close to having a vaccine that can be widely distributed is remarkable in such a short period of time. And I do think it creates an opportunity for there to be rapid vaccine development in the future. So this is very good. Now, there are details that still need to come out. Obviously, there needs to be FDA approval, but there is no indication that the FDA process has been corrupted by political interference. All indications to my mind are that this will be a rigorous, fair, robust process, one that we can all trust.
Well, it does seem like the vaccine development process here has just been nothing short of incredible from many different companies. But I wonder about the actual distribution and delivery of the vaccine. We saw a lot of stories, including in Bloomberg over the weekend, about what airlines are doing around the world to try to be ready for those vaccines to bring them to far-flung parts of the world. When do we get this vaccine is a question that keeps coming up. When does that happen, Doctor?
Well, when you heard the chair of Operation Warp Speed speaking, I think it was today or yesterday, he said that he anticipates the first people to get vaccinated December 9th or 10th. That is essentially a week and a half. And that doesn't seem unreasonable. Now, that of course, is quite different than when you and Carol and I will be getting it.
Right.
But I think it's reasonable to say that assuming that there are no unanticipated hurdles, that there will be widespread vaccination by Q2 of 2021. So that means in spring of 2021. Now, the question is, when do we get to a functional normal? And functional normal means enough of us are vaccinated to get to herd immunity. And herd immunity probably means about 70% of us. And that we're looking at maybe summer.
What about when it comes to kids? Because one issue that these trials have is who is in the trials and who's not in these clinical trials, right? Like not pregnant women and not kids. So when do kids, what is the vaccine development process like and distribution process when kids start getting new vaccines?
Yeah, and these are some of the questions that the FDA will have to be addressing, and we'll see what emerges from that. I don't know the details of the data that are collected. My anticipation is that there will be guidance on that, and that there will be groups like pregnant women, for example, but the FDA will have to look at the side effect profile and make a determination about for whom is the vaccine safe.
Dr. Galea, I'm amazed at the amount of people who are smart, educated, who come up to me and like, will you take the vaccine? Like, there's a lot of nervousness. I was having conversations this morning, like, right?
Not the typical anti-vaxxer crowd having these questions.
Right. So are you worried about that?
Well.
Yeah.
It worries me. I suppose my hope, Carol, is that once the vaccine is no longer sort of this mythical object in the clouds, once it becomes concrete, once we start seeing people taking it, once you see the president-elect or president take it, then it will remove a lot of that fear, a lot of that stigma. Now, will there be some segment of the population that will not take it? Yes. But remember, we don't need everybody to take it. We really need herd immunity, maybe 70% of people. It would be nicer if it's higher. So we do not need everybody to take it.
So I'm on the National Endowment for the Arts, National Endowment for the Humanities, and because I Googled Elvis Presley polio shot. Remember that iconic shot of him getting the polio vaccine? I imagine right now we're going to have like Instagram influencers who are actually getting the vaccine. And I think that would actually go a long way. And I think we need public health officials thinking about how we can get this message out to the general public.
Right, and getting communities. Go ahead.
I agree completely. I actually think that's exactly what will happen. And when you look at social change of public health interventions and uptake of interventions, that's what happens. You have whatever the social media of the time is. You have influencers. You have politicians. You have celebrities. You have campaigns, and all of that will make a big difference.
Right. We've heard that about like politicians going out, like local politicians going out to communities. Where people trust different individuals. Sandra, always wonderful to check in with you. Stay safe, and we'll be in touch soon. Dr. Sandra Galea, Dean and Professor at Boston University School of Public Health. Check out his book, Pained, Uncomfortable Conversations About the Public's Health. That's a really key point. I think there's going to be huge influencers like showing, I got the vaccine.
There needs to be, and there also needs to be politicians and members of Congress doing this too.
Yep, stepping up.
Because there's so much skepticism.
Yeah, I agree with you. All right, we're going to continue this conversation. Right now, we're going to do some world and national news. Back over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. A second coronavirus vaccine, you've been talking about it, is now a step farther in the pipeline for emergency use. Moderna says it is applying to the FDA today for authorization after more data showing 94.1% effectiveness. The company's CEO, Stefan Bancel, tells Bloomberg it's also extremely safe despite its speedy development.
99% of side effects happen in the first 6 weeks after vaccination, which is why the FDA, to be cautious, as they should be, has asked at least 8 weeks of data after the boost is given before companies are allowed to apply for emergency use.
If approved, the first injections of Moderna's vaccine could begin before the end of December. Well, Congress returns to Capitol Hill this week with a full plate, a tight timeline, and contrary lawmakers. Bloomberg's Amy Morris has a preview from Washington.
Lawmakers have until December 11th to figure out spending, but key Republicans are withholding their support. House Minority Leader Kevin McCarthy opposes the current bipartisan agreement, a set of top-line spending allocations for all 12 appropriations categories. That standoff could make it harder to meet the deadline. Senators return this afternoon, and the House returns on Wednesday. House Majority Leader Steny Hoyer has the House on a fast track to complete its legislative business early next week. In Washington, I'm Amy Morris, Bloomberg Radio.
President-elect Joe Biden continues to craft his cabinet today, rolling out the first set of nominations for his economic team. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Masser, along with Tim Stanovic of Bloomberg's Quick Take. And this story, I think it's trending pretty high among the most read. It's by our Jenny Serrain, and she did it for Bloomberg Markets. But it talks about Jane Fraser, who is taking over as CEO of Citigroup.
About time, right?
About time. I mean, it's like really remarkable. And this is where, listen, Tim, I'm going to get on my soapbox because I feel like this is a year where we have seen once again so many of the inequities and injustices that have been around in our world for decades, whether it's with women, whether it's with minorities in our country, whether it's with those at the lower socioeconomic part of our scale or spectrum. But I do wonder whether all the talk turns into action, and it is good to see a woman atop Citigroup.
I do too, and the reason why I said about time is because here we are in 2020, and in this, the glass ceiling that she is shattering is the financial industry's ultimate glass ceiling, as Jenny writes. But it took a long time for that to happen, and it's just shocking that we're having this conversation this year. And we weren't having this conversation 25, 30 years ago.
Yeah, I don't understand why. And again, conversation, it's good to see action. But I do wonder, this is really critical because they talk about, creating a pipeline, whether it's for women or for minorities, that if you do not get these people into senior positions, then they're not going to pull along people that are like them. And that's how you make a much more diverse workforce. And we know the studies, whether it's McKinsey and others, right, that you have a much more diverse board, you have a much more diverse C-suite, you see a company that performs better.
Right, I was going to say you start to see it in the returns.
Yeah.
And that's the ultimate way that shareholders are, of course, valuing a company. So that's where the proof is.
Right, and it has to be deliberate. Like, I think people need to think about it, create the structure, the infrastructure in place to make sure that they create these diverse workforces. So it's interesting, this story by Jenny talks about what she's going to be doing. She's looking at a lot of things that are going on because of COVID.
And I look forward to when this is not news, right?
Hallelujah. No, exactly, when it's just the norm. So stay tuned for that. Anyway, you can go to Bloomberg.com for more on Jenny's story. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. After a long holiday weekend, back to work, and it is a down Monday with the Dow, the S&P, and NASDAQ all in retreat. S&P falling the most in more than a week, but it does remain on track for its best month since April. Global stocks and American small caps still heading for their best months on record. Broad selling sending the Dow Jones Industrial Average down 367 points now, a drop of 1.2%. The S&P down 23 at 3615. That's a decline of 0.6%, and NASDAQ down 8, a drop of less than 0.1%. 10-year down 132nd, 10-year yield 0.84%. Gold is down 0.4%, 17.80 the ounce, and West Texas Intermediate crude down 0.2%, 45.44 a barrel. Facebook has acquired Customer Inc. That is a New York-based software company that helps businesses manage software conversations from multiple services on one dashboard. Facebook shares, they are moving lower by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovec of Bloomberg Quick Take. And so, Tim, it sounded like a good idea, maybe even a great idea back in the spring when the Fed kind of came out with this bold plan. They were going to save mid-sized firms that were getting kind of lost in the cracks caused by COVID. Great idea, but as it turned out, not a great reality, right?
Yeah, so says Christopher Condon and our colleagues at Bloomberg Business Week, who have a new article out called "The Fed Effort to Save Mid-Sized Firms Isn't Working, and Here's Why."
Chris Condon is Federal Reserve and U.S. economy reporter. He joins us on the phone in Virginia, along with Bloomberg Business Week editor Joel Weber on the Access line in Brooklyn. Joel, great idea, but not so when you take a look at how it played out.
Well, I got to just start with, of all the people and organizations who have been heroes this year, I think the Fed goes right near the top. So
totally.
So that's really important to start with. So let's preface with that. But
do you think Jay Powell's listening? Is that what's going on here?
I mean, he's always listening, right?
He is always
whether
listening.
or not he wants to acknowledge us is a different matter. But I think the thing that Chris really hit on here is that they did an enormous amount of good, but there's also sort of a size of company that the Fed has effectively not been able to help as much, and that's the mid-sized company. So, Chris, what did you guys discover as you dug into this line of reporting?
Right. Joel, you're right. This was kind of the bridge too far for a central bank during a crisis. I think what it really comes down to is it gets very difficult when you ask a central bank to extend emergency credit outside of capital markets. Capital markets have their own established structures and commoditized instruments that the Fed can simply step into and act like a safety net. And they reassure all of the normal participants to get going again and do what they normally do. But if you're trying to extend credit outside capital markets, you have to do it one by one. So the Fed, in this case, does not obviously have the personnel or systems to do one-by-one loan underwriting. So they had to turn to banks. And to make the bank underwriting reliable, they had to make sure the banks had skin in every loan. And if you make the banks have skin in every loan, that means they have risk and they want a certain reward. And now you're getting into a situation of tension between how much reward does the lender get and how attractive is it also to the borrower. And despite all their efforts, the Fed really just could never find a formula for this program that would make the lending attractive both for the banks that were trying to cover some risk. And don't forget, this program had a big backstop provided by the Treasury. But that backstop was there only for the Fed, not for the banks. And then people would say, well, the Fed was buying out 95% of the loans. But in doing so, they didn't really change the risk to reward calculus on each dollar of loans from the bank. I like to say it would take a $20 million crappy loan and turn it into a $1 million crappy loan. And the banks didn't want that.
Right.
So they never really were able to thread the needle and get all the parties into something that felt attractive.
So what ends up happening to these small and medium-sized businesses that needed this money?
Well, many of them have just either limped on. Some, I'm sure, have gone out of business. Many have laid off people. There's just a lot of economic suffering that is happening here. A lot of, just what the Fed is trying to avoid, the long-term scarring of the economy, of the labor market. Unfortunately, you know, this is, a lot of people will say this was avoidable if folks had realized right at the beginning that what this layer of the economy needed was not lending. Because let's face it, you're talking about companies that could not get access to regular bank loans. They were struggling too much. What they did not need was more debt. What they needed was transfers from the government to help them bridge a stressful period. So if you can't convince Congress to appropriate taxpayer money to help bridge these companies through the way they did for small companies with the Paycheck Protection Program, then this shows that you're not going to get very far if you try to rope in the Federal Reserve, which of course cannot give away money. It can only lend money.
Right.
So Chris, let's go into kind of fantasy mode here and talk about, you know, there's some changes that are going to happen at Treasury. There's been conversations already about, you know, the Treasury's clawback of that Fed money. How could the Fed effectively sort of attempt to address this mid-sized company as we look ahead to 2021?
Well, there are a couple of different avenues that have been suggested. If it still involves the Fed, Eric Rosengren, who is president of the Boston Fed, which is the portion of the Fed that administered this program, has suggested that Congress needs to be very explicit in telling both the Treasury and Fed that it can lose money with this program, that they need to take more risk, not the banks involved, but they need to take more risk, and that Congress would be willing to back them up and cover them. But that's, you know, again, we're talking about a fiscal policy decision from elected officials is required. Others, we also talked to Bharat Ramamurthy, who was a democratically appointed member of the commission that Congress created to oversee CARES Act spending. And he really thinks that they should just throw in the towel on the Main Street program, and Congress should come together and appropriate a certain amount of money into a grant program, a grant-making program. Maybe it would be a guaranteed loan program, which some of it would morph into grants, but something that's more congressional transfers directly to companies that are struggling through this, what's obviously going to be a continued tough period until the vaccines are available. So in many ways, it circles back over and over to Congress, and they shouldn't be dazzled by the idea of levering up money with the Fed. They should realize that what is much more effective is perhaps a smaller amount transferred directly to companies.
Yeah, direct cash always is kind of a good thing.
We're hearing that a lot now.
I'm up for it. Chris, we're going to leave it there. It's a great read, and it's just a reminder. I mean, we didn't have the playbook, but you really do wonder about, we know small business important to the economy, mid-sized businesses important probably to the economy as well, right?
Yeah, absolutely important, and they just don't have the same tools that the large, huge companies we talk about each day have.
Right, exactly, and have really been forgotten in this, and you do wonder with the next round of stimulus whether it or aid helps them out. All right, we're going to leave it there. Chris Condon, thank you so much, of Bloomberg News, along with Jill Weber, editor of Bloomberg Business Week. A headline that just crossed the Bloomberg: J.P. Morgan plans to increase its trader bonus pool by up to 20%. So take that. Was it Bank of America that said they were going to, I think it was last week?
Everybody was talking. That was the most read last week.
All right. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're watching on Bloomberg 106.1 in Boston, Bay State Business is next.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading. J.P. Morgan Chase is planning to boost annual bonuses for its sales and trading workers, even as payouts are set to decline across the company. The biggest American bank may increase variable compensation for traders by 15 to 20% after the business generated a record $23.5 billion of revenue in the first 9 months of the year. This, according to people briefed on the preliminary discussions. J.P. Morgan Chase shares are trading lower by 2%. Moderna is requesting clearance for its coronavirus vaccine in the U.S. and Europe after a new analysis showed the vaccine was highly effective in preventing COVID-19 with no serious safety problems. Stefan Bancel is the CEO of Cambridge, Massachusetts-based Moderna, and on Bloomberg Television and Radio this morning, he said you have to remember that an effective vaccine will relieve stress on hospitals.
And when you think about what has happened in terms of severe cases leading to hospitalization, leading to ICU, leading to death, this is really, I think, a big moment in the fight against this pandemic.
And Moderna shares are up now by 17%. Crude oil is trading lower. West Texas Intermediate, little change, down by 1 cent as OPEC ministers start hashing out the size of the cartel's oil production cuts for next year, as the group's president called for caution in a fragile market. The coalition is debating whether to maintain supply at current levels or increase it as planned in January. As for oil shares, ExxonMobil down 4.4%. Oil sector hit hard today. BP down 5.8%. EOG Resources is down 6.1%. And Pioneer Natural Resources tumbling now by 6%. Again, recapping, it is a down day on Wall Street. Stocks are falling from records as investors assess the prospects for risk assets after a blistering month-long rally. NASDAQ has turned around. It is trading higher, up 14, now a gain of 0.1%. The Dow narrowing its loss down by 1%, down 283 points. NASDAQ down by 0.4%, down 14. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Yes, indeed. Bloomberg Business Week on this Monday. Carol Masser along with Tim Stenovec of Bloomberg Quick Take here in our Bloomberg Interactive Broker studio. So, Tim, we recently heard about a new position in the upcoming Biden administration. It is the first climate czar in the U.S. We're talking about President-elect Joe Biden naming John Kerry. This is a big deal.
It's a big deal, and it's a big name for the position.
Exactly. And it brings to him, several positions, Secretary of State, Senator, almost president. So there's a lot in terms of his own experience that he brings to this position.
Well, it's totally a global issue,
yes.
So it makes sense to have a resume like his.
Totally.
Along with somebody who takes the job.
Which is exactly what our Bloomberg New Economy editorial director, Andy Brown, writes about in his column this week. Andy joins us on the phone in New York City. Andy, nice to have you here with Tim and myself. Tell us about your thinking about John Kerry and what kind of message this is sending perhaps to China as well.
Yeah, so everybody has focused on the idea that, that climate has been elevated to a national security issue, given the fact that John Kerry is going to sit in the National Security Council as climate czar. But there's also another really important message that it sends, and it's a message to China. John Kerry has been very clear that he thinks that the U.S. and China need to figure out some area on which they can cooperate. And climate is a promising area. I mean, he wrote a piece just a couple of weeks ago for the New York Times saying that U.S. and China need to work together to preserve the Southern Ocean, to save the Southern Ocean in Antarctica. And he has a long track record of hands-on engagement with China to fix problems, and it dates all the way back to at least the most notable recent episode was in 2014 when he figured out a way to get China and the U.S. to sign an agreement to limit their carbon emissions, and that was the deal that paved the way for the 2015 Paris agreements. So he has a track record of success in this area.
Well, it does seem like the Biden administration, one thing is for certain, that they will inherit a lot to do with China in the sense of a trade war that we've been in for years at this point. How does John Kerry help ease the tension on a trade war by using climate discussions? Yeah,
so I think the assumption is that
the tensions that have bedeviled the U.S.-China relationship under Donald Trump are not going to go away under a Biden presidency. And in fact, they may actually be exacerbated, particularly in the area of human rights as it relates to Hong Kong and the national security law and the detention camps in Xinjiang and so on. And in order to prevent these problems spiraling into a crisis, into confrontation, potentially even military confrontation, you need to figure out how you can mitigate some of those tensions by working together in discrete areas. And climate, of course, is hardly a discrete area, given that it crosses almost every other area of policy and arguably is the greatest threat to humanity. So, it is a big project working with China, but it's not the only area. I mean, there's pandemics, there's mass migration, but a lot of people are suggesting that climate is the most fruitful area that the two countries can work together on, particularly since they're now both aligned, the U.S. under a Biden presidency and China on the need to get to carbon neutrality. Xi Jinping, the Chinese president, has promised to do that by 2060. Biden talks about doing it by 2050.
Well, and that's what I think, Andy, just coming off the Bloomberg New Economy Forum, which, you and your team put together, it was incredible, a roundup of global speakers, and one of the pillars was all about climate. Like, it feels like something is different from even the Obama administration, the few years that have passed, that we are seeing increasingly the impact of climate change on our environment, and it's hard for global leaders to ignore. And so you do wonder, China and the United States, where they can really step up on the global stage and really make a difference here.
Yeah, well, you now have this alignment, as you say, between the U.S. and China, but also Europe. So you've got large parts of the planet that are pulling together towards carbon neutrality, and all of them putting in place programs for a green recovery from the pandemic, even though, as we did discuss in the New Economy Forum, China is worryingly in the short term trying to juice growth by building coal-fired power stations. Nevertheless, it's also installing at an incredibly rapid rate solar and wind, and doubling down on renewable energy technologies.
Well, and I do wonder, how they will use business policy, trade policy, the U.S., maybe the world, to get China to do what they need to do when it comes to climate.
Yeah, I'm not sure the leverage works in that direction. I really do think it's more a question of, we know that we are going to have these problems, and as we heard in the New Economy Forum, Henry Kissinger warning that unless we can figure out how to collaborate, we could be looking at a World War I situation.
Which is terrifying.
Really more a question of, we know we've got problems. Let's work on something where there is a potential joint solution.
What about the critics who say that Kerry, during his time as senator,
it's too soft, right?
Yeah, exactly. What about them?
Yeah, well, clearly there's a great deal of skepticism within the political establishment, both on the Democrat and the Republican side, on working with China, and it's not going to be easy. And from the Chinese side, Biden in many ways is their worst nightmare, because what he promises to do is bring together U.S. allies and friends to confront China. So we've already seen he said he wants a summit of democracies sometime next year. The EU has just written to Biden proposing a summit in the first half of the year, bringing together, it says, a once in a generation opportunity to build a coalition with the United States, a sort of transatlantic axis. And although they say they don't mention China, it's very clear that this axis, and indeed Biden's summit of democracies, is intended to counter the threat from China.
Right. Yeah, so much. And it'll be interesting to watch in terms of how this policy ultimately works its way through in the new administration. Hey, Andy, thank you so much. Bloomberg New Economy editorial director Andy Brown with us on the phone in New York City. Let's get another check on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President-elect Joe Biden and Vice President-elect Kamala Harris are finally receiving the nation's most sensitive secrets as they prepare to assume office office January 20th. Today, the pair are now being brought up to speed with the highly classified Presidential Daily Brief. It's a summary of the most important information collected across the U.S. intelligence community. Arizona is the latest state to certify Joe Biden's win, leaving Wisconsin the only battleground state that has not formalized results. Meanwhile, a federal judge is ordering Georgia's governor and elections chief to respond to the latest legal challenge to results in that state. Bloomberg's Nathan Hager with more.
Former Trump campaign lawyer Sidney Powell filed the case. She's accused machines made by Dominion voting systems of switching votes for President Trump in favor of President-elect Biden as part of a vast conspiracy involving Democratic-run cities, billionaire George Soros, and, as she puts it, communist money from Venezuela and China. U.S. District Judge Timothy Batten has given Governor Brian Kemp and Secretary of State Brad Raffensperger until Wednesday to file a response to the case. At a hearing last night, Kemp and Raffensperger said inspections demanded in 3 counties pose substantial security and intellectual property risks. In Washington, I'm Nathan Hager, Bloomberg Radio.
Americans took to the skies over the Thanksgiving holiday with traffic up to a level not seen in 8 months. Transportation officials say nearly 1.2 million people passed through a domestic checkpoint yesterday. That's the most since March, but only 41% of last year's level. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic of Bloomberg Quick Take. And a story by our Todd Shields. He watches the FCC. And the FCC chief who is currently in place, who ended net neutrality, we talked about that, I feel like ad nauseum for like...
It was a big deal.
First of all, it was like, wait, what is it exactly?
Yeah, I mean... This is something I've been covering for years, Carol, and it's still hard to explain.
All right, I'm going to put you on the spot. No, I'm not going to do it. So
well,
anyway,
it's the idea that all internet traffic is treated equally, right? And that they
and
can't be throttling it based on who owns what. And it's a big deal for startups and for big companies alike.
It's huge. We do lots of stories in the magazine about, smaller companies who are like, if they don't play the game fairly, then all of a sudden they're buried in the searches.
And look, this issue is not going away. And I think one thing that the next FCC is going to have to grapple with is the idea of inequality playing itself out when it comes to broadband access. And we have seen that play out, Carol, with schooling. Remote schooling, the heartbreaking photos of people outside McDonald's trying to Zoom with their teachers because they don't have internet access at home. That is going to be a priority, I imagine, for the next administration.
I agree with you. I think this is a big, all of the inequalities that are out there, but something like that really makes a difference. And we saw it in the pandemic, as you said, with education. But we need to kind of tackle this because social media in general has really helped widen the gap on so many different levels. And also, you think about those folks who either posted information and were able to create social momentum and that information got out there versus other information. I just think we need to have some clarity, some understanding, some rules. I didn't make sense, right?
No, that makes sense. It makes sense. And I do wonder what Pai's next act is going to be.
There.
I imagine he's going to be in the private sector. It's where he came from. He was a lawyer at a large telecom company before this. And I imagine he'll go and he'll get a high-paying job doing something similar.
Ajay Pai?
Yeah.
Yeah. Oh, absolutely. Right. This is what happens.
Yeah, he's only 47 years old.
And there'll be a 60 Minutes piece like in a couple of years.
He's like the guy to hire now, right?
No, but listen, because he'll understand the area. Listen, this is something that needs to be discussed more and more because I do think it creates, again, these gaps. Like we were just talking about mid-sized companies and getting funding. Like there's just smaller mid-sized businesses that don't have the same access. So we'll continue. I don't know. Are you more confused? I don't know.
Yeah.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Final trading day of the month. Stocks now mixed. The Dow, the S&P lower, NASDAQ higher, barely. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, back to work on a Monday, Bill Maloney.
And good afternoon, Charlie. That's right. Dow and S&P are trading lower as we wrap up this historic month. Dow is currently down 336 points. S&P's dropped 20. NASDAQ is higher by 4. The U.S. 10-year yield at 0.84%. Gold and oil are both little changed. Transports fall 86 points. And among the main 11 SV sectors, only tech was in the green. Energy and the financials were under pressure. And leaders to the upside in the Dow, Apple, Intel, and Nike, while Chevron and Dow Inc. led to the downside. In other news, Bitcoin hit an all-time high of 19,900, and Nikola plunged 27% after plans were scrapped for a GM-made truck. In deal news, S&P Global agreed to buy IHS Markit for about $39 billion, and CNBC reported that a Slack deal is expected to be at a premium to its current price. Slack jumped another 6%. Wrapping things up, high-flying Zoom Video reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, I don't know about you, Tim, but I've already done a ton of online shopping this season.
I've done a little bit, but I can't talk about it because my wife is listening and she'll know what I got.
Hi, wife.
Yeah, that's Rebecca.
Hi, Rebecca.
But yeah, I haven't. I just feel like every day is Cyber Monday, Carol.
I agree with
you.
Between
Prime Day and Singles Day, it's
and bombarded with things.
Do we need a holiday for discounts?
No, right, exactly. I want a holiday from discounts. Let's talk about this because it's expected to be kind of a record-setting number for this Cyber Monday. Tracking it all, Spencer Soper, technology and e-commerce reporter at Bloomberg News. He's on the phone from Seattle. Have you been doing online shopping, Spencer?
No.
too busy working, right?
Yeah. Too busy following, tracking everything.
So so tell us what we're expecting here. Is like how big a number is it going to be potentially Cyber Monday?
The top line of the estimates is about 12.7 billion, and that's 35% more than a year ago. The big thing there is it's like more than double the usual pace of growth for e-commerce over the past several years. It's been tracking about 15% a year. So you're just seeing this huge step up in the pace of growth on Cyber Monday.
And Spencer, this was expected because if there's one sort of theme that we've seen from the pandemic is this idea of acceleration, and everything just gets sped up. And the growth in e-commerce that we've seen, people aren't going to brick and mortar stores. I mean, on Quick Take today, we showed photos of empty Macy's. Yeah. And we saw it on Friday too.
There weren't the doorbuster
there
like
weren't
Black
the doorbusters. So is it the case, Spencer, that people are making up for this by shopping online?
Definitely. They're definitely making up for it by shopping online. And another interesting thing at play is just this kind of push and pull and this lack of trust between retailers and consumers, right? So big retail companies have been encouraging people to shop earlier and earlier in the season, saying, to try to avoid capacity issues because they know that this is going to be a record-breaking year. But still, consumers are just so conditioned to expect deals on Cyber Monday. So many of them just wait until the very last minute on Cyber Monday before they finally hit spend, before they finally unleash, this big holiday purchase because they think that's the day to get deals. So it's really this almost like standoff between retailers and consumers around the day. And despite all this messaging the retailers have done to get people to shop earlier, consumers still wait, and Cyber Monday is still the biggest spending day of the year.
But it seems like that the deals for Cyber Monday aren't even that much better than they have been for Black Friday, right?
Yeah, that's exactly it. There have been a few surprises. I think maybe that Apple Watches were marked down by about $50 by Target. Those are some of the best deals so far. A little deeper than Black Friday. But that was a challenge for retailers, right? We're telling people, in this holiday run-up to shop sooner. We're going to burn some bridges with customers if we turn around and offer really good deals on Cyber Monday after encouraging them to shop earlier. So there's a reason that the deals this year are a little underwhelming.
I mean, do we have to be worried, Spencer, about delivery? Is it not going to be like years past where, you could basically order almost up to Christmas Eve and get your, gifts in time for Christmas?
if you wait, you're going to pay. You're either going to pay in disappointment in terms of not having the stuff in time, or you're going to pay in terms of a high delivery charge to get the stuff to you quickly. That's been the message from retailers consistently, and even Amazon.com CFO on an earnings call, waved a flag encouraging people to shop earlier, and that's a complete turnaround from a company that likes to brag about, oh, someone ordered something at 11:59 and got it at 11:59 and 30 seconds on Christmas Eve. So it was a big break from their traditional messaging. So yes, you better get your shopping in early, or there's a risk of disappointment or a big fat shipping charge, or potentially both.
But how much do you think that some of these retailers too, Spencer, are like trying to kind of freak us all out and say we're not going to get our gifts in time to kind of get the ordering flowing earlier than normal?
Carol, I had to order something by November 30th. That's what they told us.
Did they?
Yeah, and I ordered it over the weekend.
It worked.
It worked.
But I wonder how much we're being kind of fooled a little bit, or kind of, I don't know.
Well, they don't know. It's impossible for them to know, right? They can put out the messaging. They don't know how consumers are going to respond.
Yeah.
And it doesn't take much. A low few percentage points in capacity can make or break a system. It doesn't take much for a system to break down and for those problems to cascade. All across the shipping network. So even if they convince a marginal amount of people, it can be the difference between a make or break a holiday.
Yeah, and Spencer, I'm wondering, given that you've been covering e-commerce for a while now, and you've seen the changes that they made during the pandemic, talk a little bit about what they've had to do hiring-wise to account for this 35% increase. And also we're seeing headlines like, FedEx and UPS seeing delivery van shortages because people are ordering so much online.
Yeah, well, there's a few issues at play here, right? So you on one side you have demand. Demand is really high because people want to keep out of the malls and they see online shopping as a safer alternative. But then you also have to think about the effects of the pandemic within these facilities and within these companies. So, like you mentioned, the van shortages. They're just not, companies that manufacture those vehicles simply haven't been as productive due to shutdowns and social distancing on their manufacturing lines. And the same thing goes for Amazon, where even with all the hiring that Amazon has done, a lot of those people are getting paid to stand around because they have to implement social distancing policies within the facility. They have to take longer breaks. So even though they've got a place, full of people, a lot of them have nowhere to work. Where they usually would if social distancing guidelines weren't in place.
All right, we got to run. Hey, Spencer, thank you so much. Really appreciate it. Spencer Soper, technology and e-commerce reporter at Bloomberg News, on the phone from Seattle. I can just imagine those distribution centers, how crazy it is. Right?
I mean, Amazon has hundreds of thousands of workers.
I know, and they've been hiring like left and right, right?
It's mind-boggling.
It is. I agree. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Master along with Tim Stenovic of Bloomberg Quick Take, and you're going to get broken in for the chart of the day with Dave Wilson.
I'm excited.
You've never done this.
I've never done this.
Oh my God, get ready.
Okay, I'm ready. I'm ready. Let's do this.
And he's not going to Google and cheat like me, so I'm in.
Well, we're sitting far enough apart that you wouldn't actually know if I were doing it.
I'll just watch your fingers. All right, we're going to get to Dave Wilson in just a minute. First up, let's get a check on the trading day. We've got 29 minutes to go, Charlie Pellet.
Indeed, and we're looking at red on the screen. Back to work Monday with the Dow, the S&P, and NASDAQ all declining. Stocks are falling from records as investors assess the prospects for risk assets after a blistering month-long rally. 28 minutes to go until the closing bell. 28 minutes left to trade in November. S&P lower now by 21 points. That is a drop of 0.6%. The Dow is down 340 points, down 1.1%. NASDAQ lower by 10, a drop there of 0.1%. We've got the 10-year down 230 seconds, 10-year yield 0.84%. Gold is down $10 the ounce, lower by 0.6% at $17.77. West Texas Intermediate crude down 0.1%. $45.49 a barrel on West Texas Intermediate crude. Moderna is requesting clearance for its coronavirus vaccine in the U.S. and Europe after a new analysis showed the vaccine was highly effective in preventing COVID-19 with no serious safety problems. A similar vaccine from Pfizer and BioNTech was submitted to U.S. regulators earlier this month and is scheduled to be reviewed ahead of Moderna's shot. Dr. Joshua Sharfstein is vice dean at the Bloomberg Johns Hopkins School of Public Health, and on Bloomberg Television this morning, he said the next major challenge will be the distribution at state level.
Unfortunately, the states have not gotten extra resources, and the states have to do a lot to get the vaccine out and to track the vaccine. So, I'm a little concerned that there'll be some states that are doing, able to rise to this challenge, and other states that struggle in the absence of adequate federal support, both in terms of guidance and resources.
Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Moderna shares, they're up 17.7% right now. Pfizer shares up 2.2%. BioNTech is up by 10.7%. Novavax shares have turned around after the start of large-scale U.S. and Mexico COVID-19 vaccine trials. Those trials delayed for the second time, but Novavax now expects the study to begin in coming weeks. Novavax shares reversing course up now by 11.1%. Recapping, stocks lower, S&P down 21, a drop there of 0.6%. I'm Charlie Pellet. Bring on the song of the day. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg.
So this is where I'm supposed to guess.
So this, yeah, exactly. Well,
I'd like to use a lifeline.
Can I phone a friend?
Yeah.
Dave Wilson, 60s, 70s?
Yep.
Higher, right?
Yep.
I'm cheating. I'm really cheating.
You can do it, Carol.
I can't.
I'm sorry, I can't be of any help. This is my first and last day on the radio.
Exactly. Done. No. Man, group or solo? Group. That's what I thought. I don't know. I'm feeling.
I'll give you a hint.
Yeah.
Woodstock.
That's what they call radio silence.
Yeah.
Is it Sly and the Family Stone?
It is.
Yes.
Yeah, Carol.
Little googly.
I'm impressed.
A little googly. I had to get there, but I knew where to go. Dave Wilson, good stuff on a Monday.
Yeah, well, you know what seems to be going higher every time you look?
S&P?
The price-to-sales ratio on the S&P 500, more specifically. Consider that if you go back to March 2000, which, that was the peak of the internet-driven bull market, basically took up the second half of the 90s.
Right.
You saw the S&P 500 get to about 2.4 times revenue. And what you've seen this month are figures more like 2.7. So you could say that that 20-year-old valuation peak kind of got left in the dust. I mean, that's sort of where we are now. And the chart really shows how much the ratio has fluctuated lately. I mean, this year, at one point it was down closer to 1.7, then 2.7. So, there's been quite an extreme move in that regard. And certainly by historical standards, you're talking about a ratio that's high. The chart goes all the way back to 1990. And I caught up to this last week because Doug Cass at Seabreeze Partners was writing about it on his Twitter feed. He's pretty active on Twitter. And he had a comment there. High valuations can obviously persist for long periods of time. Certainly that's true. But at the same time, having stocks as expensive as they are by a yardstick like this doesn't exactly give you an incentive to go out and buy them or even to hang on to them, which is another point he made. So, that's the reason to focus.
The only thing I would say is I don't think today is like the dot-com era. I just don't. I think you've got real companies that are selling a lot of stuff, making a lot of money. I think it's different.
Yeah, but now it's even more expensive to buy their shares. So, you know, you have to kind of start thinking in historical terms to try and make sense of the ratios that you're seeing now, notably in this case, price to sales. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So is this some sort of warning sign to some investors right now?
Well, it's one of several that you could point to, Tim, if you wanted to, in terms of stocks being expensive. You could look at the market value, of the U.S. market relative to gross domestic product, GDP. It's sort of like a valuation gauge that Warren Buffett threw out there years ago. You can look at all kinds of ratios like this. And the shares arguably have been expensive over time, and yet here we are, having not only come back from, that short-lived bear market in February and March, and at the same time kept going.
Right.
So it just goes to show you, the kinds of issues that investors have to grapple with at this point.
Yep, lots of discussions about that. All right, just so you know, Dave, Tim is a fan of the boss.
Big fan of the boss. I took my dad to a Bruce Springsteen show for his 50th birthday. It was like a big deal because we wouldn't live somewhere where there were concerts. Like we had to get all the way to San Francisco to go see the show.
Versus here, like where it's
just... Yeah, exactly.
You can't throw something like that in with just like a minute left and expect me to just be quiet.
Well, to be continued. To be continued. It's a little hint.
Tim, you got good timing showing up today. It's the end of November. You know what that means, Carol?
What?
The Spotify playlist.
Oh, that's right.
For the song of the day. In fact, it's up, and I'll send it out on social media.
He does have a Spotify playlist.
It goes
out. All right, Dave Wilson, thank you so much. Really appreciate it. Dave will be back a little bit later on with his stock of the day. Do want to bring you a headline that crossed the Bloomberg. OPEC meeting rescheduled as more talks are needed. We saw some pressure on oil earlier as OPEC talks had ended without an agreement on next year's oil output. But again, they're looking like they are rescheduling that meeting. All right, let's get back to world and national news. For that, back over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Arizona has certified its election results today with President-elect Joe Biden receiving the most votes for president. Secretary of State Katie Hobbs says the voting process was safe, secure, and effective, and also led to record turnout.
There were more than 3.42 million ballots cast in this election, and turnout was nearly 80%.
The last contested battleground state is now Wisconsin. Certification there will begin this afternoon after a recount confirmed that Biden won there in two largely Democratic counties. The U.S. Supreme Court heard arguments today on President Trump's request to exclude undocumented aliens from the census numbers that will be used to reapportion congressional districts among the states. Bloomberg's Irv Chapman has more.
The argument against the president was made by Barbara Underwood, Solicitor General of the state of New York.
The government can do many things to induce undocumented immigrants to leave, but it cannot declare them to be gone when, in fact, they are here and likely to remain.
Government lawyer Jeffrey Wall told Chief Justice John Roberts the court should wait.
If the president excludes those aliens, then you'd have a post-apportionment challenge for the president, in effect, to redo the apportionment.
But isn't that going to be like having to unscramble the eggs?
Wall said President Trump might choose in the end to exclude only some of the undocumented or even change his mind. In Washington, Irv Chapman, Bloomberg Radio.
Transportation officials say say nearly 1.2 million people went through U.S. airports yesterday. That's the highest number since the coronavirus pandemic gripped the country back in March. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you very much, Nancy Lyons over there in D.C. Carol Master along with Tim Stanovec of Bloomberg Quick Take, and you said you're really well read in on it, so go.
Okay, so it took over 3 years, but the day finally came today.
Da, da, da,
a
da.
new high for Bitcoin, over $19,500, Carol.
That just blows my mind.
And this is something that was traded at for pennies. Like you could get one a few years ago for pennies.
Right, exactly. It's pretty remarkable, right? And I feel like for a long time, we were all kind of trying to figure it out, figuring out how it worked and all that good stuff.
Have you figured it out yet? Because I haven't.
No. I remember our team doing a package, like buying our Matt Miller, who's over in Germany, I think bought a Christmas tree with Bitcoin, like years ago, like to try and figure out how to make transactions and how to make it work. But then it just took off, right?
Yeah, it took off. I mean, a few things happened. One is that a few years ago, when people were talking about it a lot, I mean, it was like the topic of conversation at Thanksgiving in 2017. And I remember going to a bar the next day after Thanksgiving, and the bartender was talking
That's
about
when you
crypto.
know you're like...
Exactly. And then suddenly what happened the next year? 70% decline in
Right.
2018. I think the big question, though, is what's different about this year? And I think it's institutional money. And that we've seen some institutional money express interest in Bitcoin and even get into Bitcoin.
Right.
And that's what and that's what Katie Greifeld talked about with us on Quick Take earlier today, was that you have the institutions getting in on it.
Right. So as an investment, as an interesting asset class, as an interesting, change in the financial structure, like what?
I think as a hedge.
Okay.
And what some investors are saying is this is a way to hedge against inflation, and similar to what we typically talk about when we talk about gold.
Right.
And that's what they're saying with Bitcoin.
Yeah. I don't know. I just remember when it took off and like all of the big banks and everybody was trying to figure out, and we were doing all these discussions and panels about kind of how is it going to disrupt the financial system. And I feel like we haven't quite figured it out yet.
Yeah, I completely agree with that. And we're still not seeing it being used as a currency in a lot of places.
Yeah.
And I think that if it is, then that will change things.
Yeah, exactly. In the meantime, when you look at asset classes and you look at the S&P, but Bitcoin is up more than 170% this year.
Mind-boggling.
Mind-boggling, yeah. And I always think about this as like coulda, woulda, shoulda.
Yeah, hindsight is 20/20, as they say, Carol.
All right, you're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. It is a down day on Wall Street. Do want to begin with OPEC, and according to a letter seen by Bloomberg, the OPEC Plus meeting that was due to take place tomorrow has been rescheduled as, quote, further consultations are needed. First, a tense meeting today ended without an agreement. Ministers had agreed to keep talking tomorrow, but that meeting will now happen December 3rd. Crude, West Texas Intermediate down 0.7% right now. WTI lower by 30 cents a barrel, 45.23. Gold is down 0.6%, down 10.52 the ounce at 17.77. The 10-year down 3/30 seconds, 10-year yield 0.84%. So 12 months to go left in the month, the trading month of November. S&P down 18 now, a drop of 0.5%. The Dow down 314, down by 1%, and NASDAQ lower by 6, a drop there of just about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, so it is time for the Drive to the Close. I'm Carol Massar with Tim Stenovic of Bloomberg Quick Take, and we want to bring in JJ Kinahan, who's Chief Market Strategist at TD Ameritrade. JJ, back with us, joining us on the phone from Chicago. JJ, nice to have you here. How's it going in Chicago?
Always a pleasure. I saw some great pictures of your turkey on Thanksgiving. It looked absolutely delicious.
It was really good. My husband's an incredible cook. It was a great turkey. We also did a picnic table for the squirrel. We had a little bit too much time on our hands. We were a little crazy. No wine involved. I'm just going to tell you that. Chicago, though, virus. I'm just curious how your world and what's around you is kind of impacting how you think about the financial markets.
Well, I think it's very interesting right now in the fact that it feels like it's always Vaccine Monday. Every Monday we seem to be getting some news one way or the other on it.
Which is good.
But as we're seeing in Illinois and in Chicago that the cases are coming down a little bit. But as we know, God bless the healthcare workers, have been really overworked over the last few months. And you're just hoping a flattening out is really all we need to see. I think if you get a flattening out for the holidays, that's a victory.
I agree.
To be very honest with you. And so if we can get that, and, clearly the market has looked beyond the vaccine onto all the great things that can happen. The thing that makes me nervous about doing so is we know that it's going to be a logistical circus to get things where they need to be. And so I just warn people not to get caught up too much in the euphoria. It's wonderful we have these vaccines, and I hope they can get out as quickly as possible. But we all know that the logistics are usually where the true test will come.
Yeah, I mean, and I wonder, too, just about because we've seen this year really the year of the retail investor, JJ, if we're seeing retail investors stay in the market despite not having the stimulus payments and get in on the vaccine run-up that we've seen in the month of November.
It's interesting, Tim. Obviously, we've had, as you said, it's been an incredible year in terms of volume and interest for the retail investor. What was really interesting to me was when I looked at Friday. And the reason I'm calling out Friday specifically is because this tends to be a slow week in every area of the market. And, obviously, you would expect some fall-off throughout the week. We saw it fairly busy all week.
That's so interesting.
Friday.
That is really weird.
We saw people, it was so strange. When I saw the numbers at the end of the day, I thought we'd made a mistake.
I wonder if this is because people weren't out shopping at Black Friday, and it was sort of similar to the narrative that we saw play out over the summer, right? People are stuck at home, they have stimulus payments, stimulus checks, and they're trading. They're not watching sports.
Right.
Is that what you think happened?
That could be part of it, but this is one of the first times when we've actually competed with sports because there was sports on during the day Friday, which you normally don't have. So, they could play DraftKings or whatever, sporting site they may want to go to. So I actually think that's a good sign going forward that people continue to have an interest in this market overall. And it's not, there's been so much made in the media of it being people just come in and take just day trading. I think we're seeing much beyond that. In fact, as I look at some of the, stocks that people bought last week, Apple leading the way, Tesla, which our clients have been buying for years. Now, you do have Moderna and Palantir, which, you could argue haven't been as much over years, but their technology is also a little bit newer in both cases. So I think there is a very healthy mix of people who are in it for shorter term and longer term investors. I think the longer term investor has been sort of ignored in all of this because it's not as sexy a story.
So that's really interesting. So that's what your clients were buying on Black Friday: Palantir, Tesla, Moderna, and Apple. That's where you saw action.
Correct.
Huh.
Yeah.
That's just really fascinating. I feel like that's kind of our world in a nutshell, to be quite honest.
Yeah, it is. I mean, if there are companies that we've been talking about for years, of course, Apple, but Tesla has been the name for November.
Exactly. And 2020, to be quite honest. I mean, that's really fascinating. Go ahead.
No, I was just going to say, and Apple remains still the number one held stock in our firm, Carol. Sorry to jump in there, but
No.
I think you're making a really important point.
Right, and Palantir, right? That's the Thiel company, right? Peter Thiel. Like, it's just kind of fascinating. Well, okay, so Dave Wilson was on earlier. He talked about his chart of the day and talked specifically about the S&P 500, 20-year-old valuation peak, and we're talking about price to sales. I mean, do you get a little concerned when you start to look at the valuations of the marketplace?
Yeah, I think you have to be a little bit concerned, and here's why. I think you saw it reflected a little bit in this earnings season. And what I mean by that exactly is, think about the stocks that were considered essential businesses, the Home Depots, the Walmarts of the world. Their numbers were absolutely monstrous again this quarter, yet their stocks sold off on that. I think we may come to a point where we see a similar thing in the entire S&P 500. Where, yes, these stocks, when people get back to work, when we go back to, air quotes, normal world, that things are going well. But can the reality meet the expectation? Because I think at some point, even though the numbers might be great and they might have great sales, et cetera, at that point, people might say, well, yeah, but I already expected this.
Right.
You have to beat this in order for me to want to buy more. And I think that's one of the bigger risks as we head into the spring and early summer of next year, is that the reality won't be able to keep up with the expectation.
JJ, I want to talk Slack here. It's one of the stocks that you mentioned in your recent article. Of course, CNBC is reporting that a deal for Slack from Salesforce could come as soon as Tuesday after the close. We're also expecting earnings. What are you keeping an eye on when you see this type of M&A?
I think it's actually great. We saw, I feel like it's kind of it's still in the technology sector. Think about it. We just had the chips all go through, what was that, a month and a half, 2 months ago?
Totally.
Now we're going to other areas of technology where people are sitting on cash. They're not quite sure what to do with it. It may be, okay, we've invested all we can in what we do well. Are there businesses which fit into what we do? We can continue with our scale of distribution, cut some costs out of, and really make our offering one that's very well-rounded. So in this case, on its surface, it certainly does seem to make a lot of sense that is exactly the model that Salesforce would be following with Slack.
Right.
And as I said, it was all well received when it happened in the chip sector. I think this is just a natural extension, and I would think that maybe you'll see more of it in different parts of the technology sector.
Well, we know Salesforce is acquisitive, and the other thing is our Bloomberg Intelligence analyst saying that, listen, their stock's up 50%. They do a stock deal. It's pretty easy for them to do, right?
Yeah.
I mean, in terms of the run-up that they've seen.
What does it mean for those of us who use Slack? That's the big question.
Changes.
Yeah.
Always when there's a deal. All right, JJ, thanks so much. JJ Kinham, Chief Market Strategist at TD Ameritrade, on the phone from Chicago, checking out my turkey. Well, my husband's turkey. Markets off their highs and lows. We're going to count you down, though. We are down across the board. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the end. New York Stock Exchange. Folks from CIBC virtually ringing the closing bell as we close the books on November, and it is on to the trading month of December. The Dow, the S&P, NASDAQ all lower. NASDAQ turning higher very briefly there as that bell was clanging, but it is a down day now for NASDAQ, falling 7 points, down by 0.1%. Right to the numbers. I'll give you the why in a moment. The S&P lower today by 16, down 0.5%. The Dow down 266 points, off session lows, down by 0.9%. Stocks fell from records as investors assess the prospects for risk assets after a blistering month-long rally. S&P did drop by the most in more than a week, though remain on track for its best month since April. Also today, we saw the 10-year down 3/32, 10-year yield 0.83%. Well, as for the vaccine and the market backdrop, J.J. Kinahan is Chief Market Strategist at TD Ameritrade. He was our guest moments ago right here on Bloomberg Business Week.
Clearly, the market has looked beyond the vaccine onto all the great things that can happen. The thing that makes me nervous about doing so is we know that it's going to be a logistical circus to get things where they need to be. And so I just warn people not to get caught up too much in the euphoria.
S&P 500 index, as I mentioned, lower by 0.5%. The Russell 2000 down today by 1.9%, but it did surge 18% in November, best month in its 41-year history. S&P Global buying IHS Markit for about $39 billion in stock, a deal that accelerates the wave of consolidation among the finance industry's biggest data providers. Shares of IHS Markit up by 7.1% today. Bloomberg LP, parent of Bloomberg News, competes with IHS Markit and S&P Global in providing financial analytics and information. Recapping, S&P down 0.5. Charlie Pellet, Bloomberg Radio.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaken, not stirring.
On Bloomberg Radio.
All right, it is time to take a look at some of the movers and shakers on this Monday. Carol Master with Tim Stenovec of Bloomberg Quick Take here in our Bloomberg Interactive Broker Studio. We're going to bring in two Bloomberg News cross-asset reporter Sarah Ponzak, but let's just do big picture because, man, let's see. Today, S&P 500, kind of a down day here. Risk off, 356 names in the S&P 500 lower, 146 higher, 4 unchanged. But we did hear Charlie talk about November. Russell 2000 surging 18% for the best month in the 41-year history of that index. Dow jumping 12% in November for the best month since 1987. It's just kind of mind-blowing.
Yeah, I mean, the small caps, just the performance of the small caps, incredible.
Right, which were lagging for so long and then finally kind of taking off. So good to see that. And I just want to take a look real quickly. Let me just bring it up on my Bloomberg. Take a look at the major industry groups in the S&P 500 for the day. Only thing that gained, actually two, information technology up 0.2%. Healthcare were up about 0.3%. Bottom of the pack, energy down 5.4%. So most of it down. Sarah Ponzak, come on in. What a day. What a month.
What a month. November to remember. Truly it has been. I mean, you just look down the list of different benchmarks, different indexes. You ran through a few. Either you have a record for an index or a sector or an industry, or it's one of the best performing months on record. It's pretty staggering when you just look across the board. And I just pulled up the sector performance of S&P 500 sectors in the month of November. Energy at the top of the pack up about 27%. Then you've got financials, industrials, materials. This, of course, is that cyclical rotation that we have been talking about all of November, truly inspired by this vaccine news from Moderna, from Pfizer, from AstraZeneca, really just igniting this rotation in markets. But something that is interesting, your fifth best sector, some may not guess it, is still tech. Tech still up more than 11%. So it's not as though we have seen this rotation and people are truly selling technology for funds to buy these beaten down sectors. Rather, you're seeing this massive catch-up trade in which every single sector was higher this month.
Sarah, by the way, we've missed you on Quick Take this past week. I hope you had a nice vacation.
I hope you had a nice Thanksgiving.
It was great. It was great. Thanks. Is this all about the vaccine? Is that why we saw such a run-up in November? Is this all thanks to Pfizer, Moderna, AstraZeneca?
Yeah, investors can point to other factors as well. For example, you had what some would call a relatively clear-cut election now, even though it was a contested election. But we did have the election at the beginning of the month, even though that seems like light years away. It's pretty amazing. But yeah, when you look at the rotation that
it feels like months away. You are so right about that. Sorry.
It does. I can't believe that this was earlier this month. It's hard to believe it. But this is what some were really warning about. The idea that you had to hedge for the idea that we would get great vaccine news, which we did, and that would ignite this rotation in markets. And it's interesting to think about it that way, because usually when you hear investors telling you to hedge, you think about hedging for downside. You think about hedging risk in your portfolio. Well, risk happens to the upside too, and that's exactly what happened. The idea that you've got this news, and we just saw these very, very sharp moves. I mean, the moves that we have seen on single days, and I'll just point out energy today, for example, energy closing down more than 5% in a single day. Yes, it's a very high beta sector, a very highly volatile sector, but energy closing up on the month, 27%. These are not small moves by any means.
That is wild. Like I'm looking at, like you started talking about the month, energy at the top of the list, 26%, financials up almost 17%, industrials up 16%. I mean, you would think everything is right with the world, Tim.
You would, but it's at the same time, it comes as we just get these grim figures over and over again. I mean, every morning I'm checking COVID tracking project, the numbers that we get from Johns Hopkins University, and it's like superlative after superlative, record after record. Why are investors shrugging this off? Because we know, Sarah, that the market, of course, looks forward, but we're also knowing that we're not going to actually get this vaccine until Q2 of 2021. That's what some experts are saying.
Right, but we really have to look at this in perspective. I just pulled up the year-to-date figures for S&P 500 sectors too. So as we just ran through, your best performing sectors with unbelievable performance this month were financials and energy. Well, what does that look like on the year, for example? The S&P 500 energy sector is still down 40% year-to-date. Financials are still down 10% year-to-date. So yes, we have seen this catch-up trade. We have seen optimism in the markets. There's no doubt about it this month. But you really have to look at it all in perspective. The idea that you have still seen cyclicals, value, small caps lag on the year, although the small cap trade has really started to catch up.
Yeah.
But you have a lot of ground to make up.
That's for sure. Man, what a month, though. Sarah Ponzak, we're going to leave it on that note. Just want to mention Zoom out with their earnings. Looks like they beat on most metrics, but also talking about the cost of revenue, that number coming in higher than expected. The stock, though, is down about 7% in the after hours. All right, Sarah, thank you. This is Bloomberg. Oh, no song. Sorry. Dave Wilson. Sorry, Dave. Come on in, Dave.
Tim doesn't get to hear the song, honestly.
We will get to it. We will get to it. What do you got for stock of the day?
Impinj. It's a maker of chips used to tag products for radio frequency identification, or RFID, along with devices that read the chips. The tagging is used in retailing, manufacturing, and other industries. Impinj was founded in 2000 and went public in 2016. The ticker is PI. The share surged to a record high in the first year and plunged to a record low in the second. This year, Impinj set a two-year low in March. The share price has more than tripled since then, and the rally accelerated today with help from Goldman Sachs. The firm began coverage of Impinj with a buy rating and a 12-month price estimate of $46. The target was the highest of 7 analysts in a Bloomberg survey. Goldman wrote that Impinj is, quote, an industry leader at the precipice of a significant untapped market, end quote. The firm cited the potential for more widespread use of RFID tagging in the next 3 years. Now, Goldman's call sent Impinj to a 3-year high. The shares closed with a gain of almost 18%. That was the biggest since April 2019.
I'm so grateful for RFID because it's what powers Apple Pay, and it's how you can pay for things at retailers when you don't want to actually pull your credit card out or use cash.
I love Apple Pay.
It's great.
And I've only started Apple Pay since COVID.
That's what I was going to say. It's been like kind
right?
of, yeah, it's the way that we don't have to touch things.
Great, great, great. Hey, Dave, thank you so much. Dave Wilson with the stock of the day. Tim, we're going to lose you I think, but it's great. We'll see you tomorrow.
Bye-bye.
All right, have a good night. All right, you're listening to Bloomberg Business Week. Let's get a check on world and national news. For that, it's over to Ed Baxter in San Francisco. Hey, Ed.
All right, Carol, you can tip me by Apple Pay if you'd like to.
Don't hold your breath, buddy.
Oh, okay.
Sorry.
California Governor Gavin Newsom very seriously here in a news conference. It's still going on. Newsom issuing what he calls a red flag. He says the explosion of cases causes him to project that by the middle of December, many regions will be experiencing full ICU bed capacity and over. Listen.
In mid-December, California, the ICU beds will be at 112% capacity.
112%. He says there's a very real possibility stay-at-home orders may be rolled out comparable to what was experienced in the spring. U.S. COVID hospitalizations overall hitting a new record over the weekend as health experts wait for the Thanksgiving holiday transmissions to manifest themselves. New York Governor Andrew Cuomo.
In the new battlefield, hospital capacity is the top concern, period. It's about hospital beds, it's about ICU, and it's about having enough staff and enough equipment.
He says there's a possibility of another pause. He says small gatherings are the new super spreaders.
You want to be able to behave in a risky way, and then if you get sick, then other people have to risk their lives because you were risky. Is that fair?
New Jersey limiting outdoor gatherings to no more than 25 individuals a week from today, and Governor Phil Murphy says people are not helping in contact tracing.
The number of individuals who refuse to cooperate with our contact tracers is now up to nearly 70%.
He says tough to fight it that way. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Mr. Baxter, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, and joining me right now is Charlie Pellet of Bloomberg News, of course. Listen, you talk about bonuses, and you know that story is going to trend high on the Bloomberg terminal. This is our number one story on the Bloomberg, Charlie, and it has to be about J.P. Morgan and bonuses.
Exactly, but why it's important, it's not just the folks at J.P. Morgan Chase that are taking a look at this story. It is anybody who is on Wall Street, and the question becomes, is J.P. Morgan Chase a bellwether, or is it not a bellwether for annual bonuses? And if you're not on Wall Street, it's hard to get your arms around this, because they're talking about increasing variable compensation for traders by 15 to 20%. But that, believe it or not, is viewed as a disappointment for J.P. Morgan Chase employees.
Yeah, a 20% bump. That's a disappointment. I mean, these are guys who, have been looking at 48% surges in revenues generated by J.P. Morgan's market businesses so far in what was some of the workers' busiest and most stressful years ever. And so they're saying, hey, look what we did this year. So they expect their, bonus to be commensurate with that. But what's interesting is, remember the story, was it last week? Was it Bank of America came out and they talked about, essentially telling traders that there's going to be a flat bonus pool. And we were trying to get, at that point, whether that was going to be a bad omen for Wall Street.
Indeed. One of the factors, too, that you got to keep in perspective here, J.P. Morgan Chase shares so far this year down by 15.4%, S&P by comparison up by 12.1%. Now, whether or not the stock performance should be any indicator whatsoever, but that's got to be part of the equation.
Well, and it's interesting, too, if you look at banks, we were just talking about the monthly numbers. You know about this, Charlie, and I think financials were the second best performing group. Let me just pull it up on my Bloomberg. Financials were the second best performing group in the month of November, behind energy. Energy was up almost 27%. Financials were up almost 17%. So the last month, though, investors have been rewarding these firms big time.
I just want to stress, too, that the people we talk to in our story stress that this is a work in progress in terms of bonuses.
Right. Not every firm is going to be the same when it comes to the bonus pool. Thank you so much, Charlie Pellet.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Moments ago, we did hear from Zoom Video Communications. It is boosting its fiscal year revenue forecast. It did beat estimates, but shares of Zoom Video Communications, they are tumbling now by 4.86%. Stocks retreated from records as investors assess the prospects for risk assets after a blistering month-long rally. S&P down the most in more than a week, but the benchmark still at its best month since April. S&P down 16 today, a drop of 0.5%. NASDAQ lower by 7, down 0.1%. Dow Jones Industrial Average down 271 points, a drop there of 0.9%. 10-year down 2/32, 10-year yield 0.84%. Gold down 0.7%, 17.75 the ounce. And West Texas Intermediate crude down 1.1%, 45.04 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So one stock that caught our attention today was Nikola. Shares tumbling after GM scaled back a partnership. And it was kind of a wait what moment because it feels like we were just announcing this deal. So here to make some sense of all of it is Bloomberg News Detroit Bureau Chief David Welch. He joins us on the phone from Detroit. David, hey, good to have you here. Man, I feel like this was, it's not you, it's me kind of a relationship because I feel like as soon as it was announced, there was things kind of saying, well, wait, it's not really a partnership. And here we are today with GM kind of scaling back whatever that partnership was. What happened? How do we understand this?
So you have to go back to the beginning of this thing. September 8th is when they actually announced the deal. And within weeks, there was a short seller's report saying the company didn't really have technology, that the founder and former chairman, Trevor Milton, had said they had more than they really did, essentially accusing him of fraud. And then there were sexual harassment accusations against him, and he was ousted. He's out. And what should have been just a quick and very procedural closing of a deal dragged on for weeks and weeks. They always had a December 3rd deadline for the deal, but these things are usually kind of formalities, right? And the shares in Nikola had taken a beating over the ouster of the chairman. And let's just say, in reference to your relationship analogy that you started this with, it got weird. So they didn't close for the longest time, and now basically they have boiled this down to simply GM is a supplier of a fuel cell system to this company. They're not going to own shares. They're not going to develop a pickup truck. There isn't going to be this sort of joint industrial partnership that was sketched out in the original agreement.
So bad for GM, bad for Nikola. Am I saying it right? I know I've heard it like a million different ways.
Nikola, yeah.
Nikola. So is it bad for both of them? Like, how do we read this as investors or observers?
Well, it certainly, I think it's bad for Nikola in the sense that when GM was going to own a piece of the company and was going to open up its supplier network and manufacturing expertise, General Motors had a vested interest in making this company succeed. Now they don't. Now they're just a supplier. And I think that is more, this went from being partners to much more than arm's length here. I mean, sure, GM only gets to sell fuel cell systems if this company succeeds. It's just not the same as owning a piece of it. So they no longer have that kind of, real close tie with GM and this huge player with tons of suppliers and expertise helping them out. Is it bad for GM? Look, all GM walked with Nikola. Nikola also decided they didn't want to give away a big chunk of equity for free. And for GM, this really was basically a blank check. If Nikola didn't even do well, 11% of the company was going to be worth something. GM was going to have basically, this is a free call option on whatever Nikola's stock was worth. So they lose that, but they also don't have the risk. They don't have the reputational damage anymore. They're just, they've sort of, kind of cleanly put a lot of distance between them and Nikola.
I feel like, David, it's one of those Harvard Business School case studies. It's like, okay, here's how not to do a partnership. And I just wondered, did somebody not vet in the beginning, or I don't know. I also feel like everybody's racing, and this isn't apples to apples with an Elon Musk, but everybody's racing to kind of play catch up and try to, kind of make some really major strides when it comes to alternative fuel vehicles. And I just feel like there's a lot of stumbling going on.
So General Motors did due diligence on this for sure. And every knew that there were some issues with milk. GM knew what kind of technology this company had going into the deal. They knew that the Badger pickup truck was basically just a bunch of video images. There was no engineering behind it. And they knew that the fuel cell was a Bosch system. Bosch is a supplier in Germany. And really, Nikola was just an integrator. And they knew that Trevor Milton had a tendency to get ahead of himself and shoot his mouth off on Twitter. And as evidence, go back to the original deal when Vecto IQ, which is the pipe or the SPAC that bought Nikola and took it public, the things they did is they made Trevor Milton non-executive chairman, and they made the president of the company, Mark Russell, the CEO. Right. So they were kind of minimizing his hands on day-to-day operations. So the signs were there, the actions were there to back up the fact that people knew that Milton was kind of an issue. I don't think anyone foresaw the whole thing blowing up quite the way it did, and that a short seller was going to come out and reveal that they had pushed a truck down a hill instead of actually making it run. And now look, Steve Gursky, he's former GM executive whose SPAC took Nikola public and is now the chairman of Nikola. He's become chairman since Milton left. He told me in an interview a couple months ago that he's been in Nikola's fuel cell and it does work. So I think what people did is they looked at those past stints and said, look, the truck works now, and with GM, it'll make a great business. So yeah, the guy's a little bit silly, but we can kind of kick him upstairs and make this work. And that's not how it worked out.
Jeez, it's just kind of fascinating. Just very quickly, got 30 seconds here. Does GM do something else? Does Nikola hook up with someone? And you got to be quick, David.
I think Nikola is going to try to find partners, someone who can help them assemble the vehicle. They're definitely going to need a partner to help build the hydrogen fueling network to fill up these trucks with hydrogen, and they're going to need somebody like BP to help them do that. So Nikola's whole thing is they're an integrator, and they're going to be looking for partners in every aspect of their business.
All right, good stuff as always, David. Thank you so much. David Welch, he's Detroit Bureau Chief at Bloomberg News, making sense of that GM Nikola news that we got today, joining us on the phone from Detroit. You're listening to Bloomberg Business Week. I'm Carol Masser in our Bloomberg Interactive Brokers studio. And for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli is coming up next.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Coming up, we're going to talk about the IPO market that is 2020 and two big issues that are going to be coming your way. We'll get into Airbnb and DoorDash in just a moment. In the meantime, I'm seeing a bunch of headlines crossing from Fed Chief Jay Powell. He's talking about the economy.
Indeed. I'm on it. I've got it. That's what we do here at Bloomberg. Breaking news. Let's begin with Fed Chair Jay Powell saying he sees, quote, significant challenges and uncertainties on vaccines. The Fed Chair also says recent vaccine news is, quote, very positive for the medium term. The context for these remarks, testimony released today ahead of a hearing tomorrow before the Senate Banking Committee. An update on work-from-home standout Zoom Video Communications. Zoom Video boosting its revenue forecast for the full year. The guidance beating the average analyst estimate. Shares, however, trading lower now. Zoom is down by 4.8%. Stocks fell from records down Monday as investors assess the prospects for risk assets after a blistering month-long rally. S&P up 11% in November, the most since April. Dow average up 12% in November, best month since 1987. And the Russell 2000 for November surged 18%, best month in its 41-year history. Right to today's numbers, it was a down day with the S&P falling 16, down 0.5%. The Dow dropped 271, down 0.9. NASDAQ lower by 7, a drop there of 0.1%. 10-year yield, 0.84%. Gold down 0.7%, 17.76 the ounce. And West Texas Intermediate crude oil down 1%, 45.06 for a barrel of West Texas Intermediate crude. Moderna is requesting clearance for its coronavirus vaccine in the U.S. and Europe after a new analysis showed the vaccine was highly effective in preventing COVID-19 with no serious safety problems. Stefan Bancel is the CEO of Cambridge, Massachusetts-based Moderna, and on Bloomberg Television and radio this morning, he told us the vaccination rate will be picking up.
I think what will happen basically is people that are ready are going to get vaccination when the vaccines are approved. And people that are on the fence, I think in the next few months, when they're going to see that people who got the vaccine have no safety issue, they will decide to get vaccination, because if you can, through this vaccination, prevent disease, this is how we're going to go back to a normal life.
And Moderna shares up today by 20.2%, Pfizer up 2.9%, and shares of BioNTech up today by 13%. This headline from the Bloomberg Professional Service: Wisconsin has made the Biden win official. The governor will name electors. Again, repeating, Wisconsin has made the Biden win official. 10-year yield, 0.84%. Gold down 0.6%, 17.76 the ounce. West Texas Intermediate crude down 1%, 45.06 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
So, Charlie, you did say Russell 2000 surging for 18% for the best month in the 41-year history. That was before we were born, right?
Without a doubt there, absolutely. And so far this year, by the way, the Russell up by just about 9.1%.
Yeah, but what a month November was. All right, Charlie, thank you so much. Speaking of what a month, what a year. It's been a pretty busy IPO market here in 2020, and we've got a couple more coming your way. We're talking about Airbnb and DoorDash. They're going to disclose higher than expected valuation ranges for their IPOs when they start their roadshows this week. This is according to those in the know. Let's get a little bit more on what's up. Startup reporter Ellen Hewitt joining us with her story on the phone in San Francisco. Ellen, it's like kind of amazing, like when you think about this market year, this market environment, how volatile it was, and yet these big name IPOs continue to come out.
Yeah, and especially with a company like DoorDash, which I cover, I mean, this has been an extremely tumultuous, but kind of in a good way, year for them. They had maybe been, planning, I think they filed officially like their confidential filing to go public in February. So that indicates that, before the pandemic, they were planning to go public, but then obviously things changed so much for their business in the months after that. I think they're in a much stronger position now, actually, than they probably ever predicted to go public, because revenues during the pandemic have skyrocketed. For DoorDash, they are making 3 times in sales this year what they did in the same period the year before. And they actually had their first profitable quarter ever in Q2 of 2020. So it's been, I think as much as pandemic has hurt many people, it has been a real boon for companies like DoorDash.
Well, Ellen, how do you think investors are going to look at it, though? Are they going to say, well, yeah, of course you're doing well. Everybody's stuck at home and they're ordering left and right. Will investors look beyond that and that will ultimately impact the valuation?
I think they're probably all asking themselves this question, and I have been asking myself this question as well. And so I actually called up some former CEOs of, now defunct food delivery services, of which there are many, which I think just goes to show how important it is to note that DoorDash has, stayed alive, because the graveyard is quite full. They pointed out to me that, DoorDash is in a strong position because they have 50% of the food delivery market share for restaurants, and that makes it much more likely that they can compete more effectively on price. So the problem with food delivery is it's a notoriously price-sensitive industry. You and I and whoever else is ordering delivery, we're likely to change which platform we use if it becomes too expensive. We'll just opt for a cheaper version. So if you're the leader in the market, it's easier for you to offer something cheaper. So you're more likely to hold on to your lead. So they pointed to that as a reason to believe that DoorDash's current good trajectory could stay.
Yeah, I mean, it's pretty wild. So we're looking about a 25 to 28 billion valuation for IPO. Tell me about Airbnb too, right? That's the other big one.
Yeah, I'm less of an expert on Airbnb, but they also have had, obviously, their business greatly affected by COVID. I think they, at the beginning of the pandemic, they saw lots of layoffs. They cut staff very aggressively, but they're also seeing a kind of a resurgence as people turn to Airbnbs to stay on sort of longer quarantine, remote working type setups. People are using Airbnb in unexpected ways. And they're targeting a range that is pretty high, $30 to $33 billion.
Wow.
And DoorDash actually, based on their amended filing this morning, said the range is actually higher than we had originally reported. It could be as high as $32 billion, which is much higher than the previous private valuation, which was around $16 billion.
That's some real money.
Yeah.
It's pretty remarkable. And when are they expected to roll out?
Probably in the next few weeks. So the roadshows, both of these are going to be happening in pretty tight succession. We don't know the exact days, but based on the roadshow for DoorDash, for example, we expect to start this week. I believe same for Airbnb, which suggests probably a mid-December listing. I mean, as we saw, these things can always be fluid. WeWork state, totally fell off the calendar, but we would expect, I think, barring any hiccups, that they would happen in the next few weeks.
Ellen, it's Airbnb and DoorDash calling. They're like, listen, Ellen, we're not WeWork.
Yeah, I know. It's an unfair comparison.
All right, good stuff. Ellen, thanks so much. Ellen Hewitt, startups reporter at Bloomberg News, joining us on the phone from San Francisco. Let's stay in San Francisco and check in with Ed Baxter for World and National News. Hey, Ed.
Hey there. How are you? Good to hear my buddy Ellen on there. Thank you. Wisconsin, Carol, has just certified Biden as a winner, and the governor will announce the electors. This is Arizona's officially certified its Biden election winner results as well.
Of those 3.42 million ballots cast, over 88% of them were cast early, which provides more proof that Arizona's ballot-by-mail system works.
And Secretary of State Katie Hobbs says the program will be expanded. And Georgia Secretary of State Brad Raffensperger says the state will investigate a small number of groups which may be illegally registering voters from the upcoming Senate runoff. He's also offering his displeasure with misinformation that continues to be circulated.
There are those who are exploiting the emotions of many Trump supporters with fantastic claims, half-truths, misinformation, and frankly, they are misleading the president as well, apparently.
And this is Joe Biden and Kamala Harris get their first official presidential transition briefings. U.S. COVID hospitalizations hit a new record over the weekend as health experts wait for the Thanksgiving holiday transmissions to manifest themselves. And in California, Governor Gavin Newsom is issuing a red flag warning saying hospital and ICU capacity in some regions will be full by mid-December.
Because of hospitalizations in ICUs, we're not just now looking at positivity rates. We're not now just looking at case rates. We are now looking in real time at hospitalization numbers and ICU capacity in those regions.
He says new stay-at-home orders may have to be issued and aren't out of the question. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Mr. Baxter, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Bloomberg Interactive Brokers studio. Joining me is Charlie Pellet of Bloomberg News, voice of New York subways, and someone who just loves to get on an airplane.
I do, and the airline industry really is going to be the heroes in what they are calling the mission of the century in getting these vaccines from here to there to here, depending on where you are. But they have got their work cut out for them, Carol.
Yeah, this story is really cool. It talks about Lufthansa. It's one of the world's biggest cargo carriers. And they began planning back in April in anticipation of the shots at Pfizer, to Moderna and AstraZeneca that they are all developing in record time. A 20-member task force is at work devising how to fit more of the crucial payload into the airline's 15 Boeing 777s and MD-11 freighters, along with hold space in a vast passenger fleet now flying at just 25% of capacity. Listen, we know, right? The airlines, they've not been flying, but now they're thinking about retrofitting and figuring out, making sure that they can fly all of the vaccines around the globe.
Indeed.
Where they need to be.
And temperature is obviously a very critical part of all of this. You got Alexandre de Juniac, the CEO of the International Air Transport Association, summing it up by saying the world is counting on us. He says it's going to be the largest and most complex logistical exercise ever. IATA estimates that the equivalent of 8,000 loads in a 110 capacity Boeing 747 freighter are going to be needed for this airlift. So it's going to be extremely challenging times ahead.
Well, and listen, we're all excited about the vaccine news, as we should be as it progresses, but they also say, you just talked about the 8,000 loads, which will take 2 years to supply some 14 billion doses, or almost 2 for every man, woman, and child on Earth. So it's a pretty tall order, Charlie.
And
it's
also,
huge.
too, just want to mention that it's not going to be just these freight aircraft, the big, and you can always tell a freighter, by the way, by the fact that it doesn't have windows. But in addition, this cargo is also going to go in the bellies of the world's 22,000 regular jetliners.
Yeah, I guess freight doesn't like to look out the window. I always like a window seat. I'm just going to say that. All right, Charlie Pellet, thank you so much. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Do want to begin with a headline from the Bloomberg Professional Service, and ExxonMobil is planning a workforce reduction of 15% by the year end 2021. ExxonMobil shares after hours trading lower now by just about 5%. Stocks fell from records as investors assess the prospects for risk assets after a blistering month-long rally. S&P 500 index down 16 today, a drop there of 0.5%. The Dow down 271, down 0.9. NASDAQ lower by 7, a drop of about 0.1%. 10-year down 1/32, 10-year yield 0.84%. Gold down 0.6, 17.77 the ounce, and West Texas Intermediate crude down 1%, 45.06 a barrel. After earnings, Zoom video communication shares, they're down now after hours by 5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. ExxonMobil seeing a non-cash fourth quarter impairment charge of $17 to $20 billion. That just to add on to what Charlie said about some of the ExxonMobil news after the close. Well, record amounts of money we know are flowing into ESG ETFs this year. Fund managers from BlackRock to Allianz Global and Invesco have said ESG portfolios outperformed during the COVID-19 sell-off. We know investors, consumers, everyone cares increasingly about ESG. So earlier today, I had a talk about conscious sustainability with a company that has for years thought about its impact on the environment and finding ways to make products that don't contribute to climate change or further pollute our world. Here is my conversation with Jenna Johnson. She's head of Patagonia from the Bloomberg Live Sustainable Business event. In this excerpt, Jenna talks about how companies can make money and still do good in the world. Check it out.
Why is it that more retail isn't doing what you are? Why is it more companies doing what you are doing? What's holding it back in your view?
I think it's fear. You know, I think that there's a lot of companies that are afraid. They're stuck in this growth model, and they're afraid that making change might influence or impact their ability to continue to see growth. Certainly, I think it's very much so in public organizations. We're really fortunate that we're a private organization. But we're a private organization that's sought after by a lot of investors because we are an extremely profitable company. And so I think Patagonia has proven that through good work and doing the right thing, you can be profitable and run a very successful business. But I think that there's a lot of fear in companies today to be willing to make that change and to try to implement some of these things. What I would say, though, in relation to that is that I think the thing that they should be the most afraid of is not changing. You know, the consumer is very clearly changing and is very clearly demanding sustainability and responsible business practices from organizations all around the world. And for those companies that choose not to be willing to make change today, I think that's their greatest threat, actually. But many of them don't quite see that yet.
Jenna, what do you think would kind of move the needle more? And I know you and I have talked a lot about transparency. You guys at Patagonia, I mean, I've gotten the catalogs. Like you kind of lay it all out. You go to the website and it talks about all the initiatives that you guys are doing. Do we need a grading system of some sort so that if I go shopping, I can compare this sweater to this sweater and understand what the impact on the environment is, what the impact on, you name it, in terms of sustainability? Do we need a grading system? And if so, who needs to put it in place? Is it the different industries? Do investors need to be involved in this?
I think a lot of people need to be involved in this. I do believe that a grading system could be useful. I believe in transparency first and foremost. And so I feel the first step is simply or businesses kind of aligning on metrics that are important and being able to all agree on what those are and put those forth. Could that be a grading system? Absolutely. Could it just be collaboration amongst corporations and businesses to find what those metrics are that really show kind of the work that the businesses are doing? I think that creates an incentive, of course. We are competitive by nature, but there are some things that we should not be competing on. And competition in terms of sustainability and responsibility, this is where collaboration works, and we can find other things to find as our competitive advantages amongst businesses. But I think if we could align, and certain industries are beginning to have these conversations, and it's really great to see. Align on specific metrics that they can become really transparent with. Then you do put the ownership back into the customer's hands to be able to educate themselves and make really informed decisions when they go to make purchases.
Well, you know, it's interesting. Before we got going, you and I were talking about the pandemic and how remarkable it is what we've seen, right? With, you know, pharmaceutical companies, an industry that is competitive, right, with one another, and yet with government support, it's pretty amazing and remarkable what they've been able to do in terms of reducing a vaccine, development of a vaccine from 10 years to a year, roughly, or so. And I do think about collaborative efforts globally, how it could bring about changes when it comes to some of the things that you guys are doing and implementing it on a wider scale. And I do wonder, are those conversations happening, or obviously maybe they need to happen?
Yeah, I mean, they are happening. I think the vaccine example, Carol, is such a beautiful example because we're seeing it play out, right? They're all going to be, all those businesses are going to be profitable. It's not a race to be first in this particular case. It's a race to work together so that everyone can offer this vaccine to the world and we can move forward. You know, I think kind of going back to how we started the interview, if all businesses had a mission statement that said that they were in business to save the home planet, we would operate so differently with each other. And we would all work together to find the ways that we can have our own, you know, unique skill set that we bring to the table in order to contribute to what is an incredibly complex solution to save the home planet. There is not one silver bullet. We all need to be finding our own ways, what we can contribute to solving the crisis. And in doing that, we therefore can sustain a long-term business that can be really profitable.
What's the impetus? What's the catalyst? What's the reason why? I mean, obviously we should care because it's our environment. If there's no environment tomorrow, there's nothing. But what is it? What would you tell them to kind of get the needle moving a little bit?
Consumers care. Your customer cares. That's what I think is the most important thing, even if you are not doing it because you want to save the home planet per se. Although hopefully everyone wants to save the home planet, but sometimes that's a really big thought and it's really hard to wrap your head around your business. But even starting with the next generation, the millennials out there who are growing up and they care about saving the home planet. They care about using their dollars to invest and to spur demand in the ways that they feel have purpose and will create a future for them and their children. They see the reality that their world is completely being blown apart with this environmental crisis, and it is getting out of control. And as they grow up, they're worried about it. They're very, very conscious of the situation that they're growing up in.
That's Jenna Johnson, head of Patagonia Inc. From the Bloomberg Live Sustainable Business Summit that is being held today and tomorrow, talking about how companies can make money and still do good in the world. It's a private company. It's a B corporation. They've got a mission. They've got very strict standards that they have to live by as part of their corporate mission and responsibilities. And yeah, like everything they do, they are constantly, whether it's sourcing cotton, it's organic cotton, and now they're thinking about how to do it in a regenerative farming way. They're constantly thinking about how they can improve their procedures, their supply chains, so that they are not leaving any kind of impact on the environment. In fact, thinking about replacing soil when it comes to farming and really making sure there's no carbon footprint. So it really is in the DNA of Patagonia. So you can check out more of that entire conversation. We talked for about 20, 25 minutes. You can just go to BloombergLive.com and check it out. You're listening to Bloomberg Business Week. I'm Carol Masser. Coming up, we're going to talk a little bit more about an auction coming up. We teased it at the top of the show. And then we're going to check in with Peter Atwater. We're going to talk about that K-shaped recovery.